Good afternoon and welcome to Capital Account. Happy Friday, too. I'm Lauren Lister here in Washington, D.C. And U.S. Congress today finally approved an extension of the payroll tax cut for 2 months, putting off a tax increase for millions of workers. So after much partisan politicking, bickering, okay, they did it, saving face for the moment. But could it hurt their stock price headed into 2012 elections? You heard me right. Stock price. We will talk about the political derivatives market a Chicago exchange is betting on. And could it be a continuation of the financial industry playing by their own rules? Listen to this.
This is like the Special Olympics for financial fraud, where everyone gets a gold medal, but nobody actually achieves anything. And they keep lowering the bar.
We'll talk to Max Keiser, host of Keiser Report, to find out what he thinks. And speaking of derivatives, these bets added fuel to the fire that engulfed the financial markets in 2008, most famously, of course, seen in the explosion and bailout of AIG. More recently, MF Global customer money used to trade on these exchanges went missing. So where do future exchanges come from, and where have they gone wrong? From ancient Greece to MF Global, we will break it down. And heading into 2012, will it be a happy new year for the U.S. economy? Maybe not. Economists predict sluggish 2% growth, an economy held down by housing troubles, government budget cuts, and a lousy job market. But that did not stop hordes of people from lining up at malls and waiting all night for a chance to buy the $175 Air Jordan sneakers. We'll show you what happened. Let's get to today's Capital Account. It is Friday, and we are getting closer to the first vote in the lead up to the 2012 presidential elections. January 3rd, really just a week and a half away, is the big day for the Iowa caucuses. And also, if a Chicago's derivatives exchange has its way, this will also be the big day for their new venture to kick off, betting on the outcome of this presidential race. So suddenly when you see gaffes like this one, which is now infamous, you could think about how to cash in on it.
The third agency of government, yeah. I would do away with the education, commerce, and let's see, I can't. The third one I can't. Sorry. Oops.
Oops. And seeing a billboard like this one, you may, pull over and think about how you're going to change your trading position, because the North American Derivatives Exchange, the NADEX, it's based in Chicago, has filed for permission to list futures options on the political outcomes of the 2012 elections. Now, this betting and prediction markets does exist. For example, on InTrade, this chart shows how Mitt Romney is trading. But what's new is this would be the first regulated U.S. market, to offer legal betting on the outcome of a U.S. presidential election. Investors could also wager on which party will control the House and the Senate. We talked to Max Keiser about this, financial activist and host of the Keiser Report on RT earlier, because he actually founded the Hollywood Stock Exchange in 1996, which allowed people to trade on actors and movies. So he knows prediction markets. Here he is actually talking about it way back when.
There's an attempt to make a simulation based on Wall Street is very accurate. We have our own, for example, Hollywood Reserve Board Chairman, Dr. Zeros, who raises interest rates up and down.
So that was his experience with the Hollywood Stock Exchange. He also used to work on Wall Street. So I started by asking what he thinks when he hears that U.S. democracy could now be traded on an exchange.
Well, there's a couple of things. First of all, this combines the graft that you see in Washington with the fraud and malfeasance you find on Wall Street and in Chicago. So it's combining the two worst elements of American politics and economics today into one wrapper. And, of course, the potential for abuse and insider trading is huge. And I think if you have to go back to the Dodd-Frank in last summer, where they outlawed parts of these prediction markets contracts, part of the covering such things as terror futures, but they also banned box office futures contracts at the same time. And I think that's a very interesting story. Why would they ban box office futures contracts but allow political futures contracts? There's a story there. I'm not sure many people know that story.
Do you know that story? What is the answer?
Well, my understanding is that the Cantor Fitzgerald, which put together a Cantor exchange, and they spent years putting it together, box office futures contracts, and they spent over $20 million. When the MPAA found out just a couple of weeks before this was set to be approved about the emails of the death threats to Hollywood stars that were circulating at HSX Cantor Fitzgerald, they were freaked out, because they realize that this sets up the potential for people to attack Hollywood stars to make money on a box office future scenario. So stars like Brad Pitt and Angelina Jolie were mentioned in emails. And these stars would be targeted by traders, sold short, and then attacked. But it's interesting that America's politicians don't get this kind of protection, but America's Hollywood stars do. So what does that tell you about America? Politicians are expendable, but stars are not expendable.
That's an interesting point that you bring up, but I want to look at how politicians could possibly use this exchange. We've seen candidates like Herman Cain be accused of running for president to essentially sell books. I'm curious if there's any example you can think of where, you know, GOP candidates for president could actually use this exchange for their personal benefit or to help their campaigns.
Well, in 2008, we know that John McCain was manipulating his price on the in-trade market to make it appear as though he was a front runner. So you can abuse these markets as easily as you can abuse any market to affect the perception of what candidates are ahead, and thus affect the how media covers the candidates. And by using money and fraud, as you do in all markets, these prediction markets on this exchange are no different. They're totally influenced by money and corruption, except now it affects politicians. So the political environment of America will now be financialized, securitized, and traded in the same fraudulent manner by the same people that brought us MF Global, AIG, and all these other financial scandals will now be right inside the political process. And, of course, inside information in Washington is legal. So now you have candidates trading on their own inside information about themselves, so they can potentially spread rumors about themselves, make money on the rumors, trading on inside information, then use the profits to buy off whoever they need to buy off or to feather their re-election campaigns. So this is really the death knell for America in a lot of ways, because you're taking that last bastion of hope that there are such a thing as a political democratic process, and you're throwing it to the wolves on Wall Street and saying, let's securitize it, let's financialize it, let's turn it into the same corrupt cesspool that we now have on Wall Street and in the Chicago Mercantile Exchange. So this, I'm afraid, it's going to be spectacular. It's going to go out in a blaze of glory. But this is definitely got to be the end, I would think.
Okay, well, speaking of money and corruption, you brought in Congress, you brought in Wall Street. So naturally, let's bring in the Fed. I want to go to Dimitri Kofinas and let him jump in here.
Hey, Max, we know that from a 2003 Federal Reserve transcript that the FOMC was considering using the derivatives market, specifically put options on U.S. Treasuries, to influence long-term expectations of the Treasury yield curve. Since the Fed has expressed interest already in meddling in these markets, what would stop them from going into the open market for electoral futures contracts for politicians and actually influence what the people of the United States think is possible with respect to who they can or can't elect?
Well, nothing stops them. I mean, the scandal that you're talking about is the government selling puts to income. Essentially, Microsoft does the same thing. Other big companies do the same thing. They sell puts on themselves for the income, then they buy stock on themselves so that they never have to pay out on that income. It's the same thing as a credit default swap. You're writing credit default swap, so you'll never have to pay because you can simply go bankrupt and say that the counterparty doesn't exist anymore. So, yeah, it just opens up a can of derivatives, but it applies it to that democratic institution. And they're not taking into consideration the assassination risk potential here. You're putting a bullseye on these politicians' head. Like Gabriella, who was shot in the head after Sarah Palin put a bullseye on her head, she got shot. Imagine putting that now, traders all over the world who have a vested interest in seeing these politicians get shot. But Hollywood